Have you ever wondered why some people seem to have a magical touch when it comes to making money? Well, here's a little secret. They've harnessed the power of stock market investing. You might think, but isn't that only for the rich and the Wall Street wizards? Not at all. Anyone can tap into this wealth building tool and secure their slice of the profit pie. Though Warren Buffett, one of the top richest people in the world, achieved his wealth through investing, he's not the only one. Many other millionaires built their wealth by investing in stocks. If you are yet to invest in the stock market, you are missing out on a great opportunity to build wealth. Could these be why you don't invest in stocks? 1. The fear of stock market volatility. Many people witnessed major crashes in the stock market, from the Great Recession to the impact of the COVID-19 pandemic. These downturns are the reasons why many refrain from investing in stocks, as they cannot bear the thought of their hard-earned money disappearing in another crash. However, while this fear may be valid for some to avoid stocks, life is inherently about taking risk. Without the courage to embrace risk, personal growth becomes stagnant. Some individuals can endure losses easily, while others struggle with even small amounts. It's important to know your risk tolerance and invest accordingly rather than avoid the market altogether. 2. The lack of understanding. While the stock market is a popular term, most people don't understand how it works. This lack of comprehension has debarred so many people from venturing into it. Unfortunately, the education system does not provide formal instruction on the stock market, leaving many to mere speculations and unnecessary fear. For some, they've experienced substantial losses in the past due to inadequate information, which further discourages them from venturing further into stocks. Fortunately, access to information and knowledge has become much easier in today's digital age. Online resources such as reputable YouTube channels and financial blogs offer valuable insights that can help you develop a basic understanding of the stock market. There are financial experts available who can guide and teach you all the essentials. A lack of understanding should not deter you from investing in the stock market. If you are committed to taking your financial well-being seriously, you can start by acquiring basic knowledge about the stock market. 3. Impact of inflation. It is understandable that the prospect of inflation eroding the purchasing power of your investment can be concerning. After all, when prices rise, the value of money decreases, and this can have a negative impact on investment returns. However, it's important to recognize that inflation is an inevitable part of the economic circle. It is a phenomenon that has been present throughout history and is likely to persist in the future. While inflation may pose challenges to investors, it should not be a reason to completely avoid investing in stocks. In fact, investing in assets such as stocks can be a strategy to mitigate the effects of inflation over the long term. Historically, stocks have demonstrated the potential to outpace inflation and provide investors with a hedge against rising prices. By investing in stocks, you have the opportunity to participate in the growth of companies that can adapt and thrive even in inflationary environments. Moreover, dividends and capital appreciation from stocks have the potential to outpace inflation rates. This allows investors to maintain or even increase the value of their wealth over time. 4. Financial constraints. Could financial instability in the form of student loans, high inflation, and various bills be the very reason preventing you from investing? These monetary obligations tend to consume our daily lives, barely leaving any space for the mere thought of investing. Moreover, the ever-increasing cost of living further exacerbates this hesitation towards investment. However, you should recognize that investing in stocks does not necessarily require a substantial amount of capital. What truly matters is having the willingness to invest and dedicate time to acquire knowledge before taking the plunge. Investing time in learning will make you discover that you don't need thousands or millions of dollars to start. You can begin with a modest sum, such as a few $100s, and gradually build your portfolio over time. The key is to start small and keep expanding your investments. So, don't let a lack of funds discourage you from investing. Remember, the journey towards financial independence and wealth accumulation begins with taking the first step, regardless of the initial investment amount. By being resourceful, diligent, and strategic, you can navigate financial constraints and embark on a brighter financial future. 5. Emotional biases. Behavioral biases such as loss aversion and the fear of missing out can have a significant impact on investment decisions. These biases influence your willingness to invest in the stock market. You may be concerned that allocating money for investments will require you to forego satisfying your immediate wants, and it's common for humans to prioritize meeting their current desires before thinking about investing for the future. This fear may also be rooted in the stories you've heard about friends who suffered losses after investing their money in what seemed like a sure thing. You need to know that every investment comes with risk. The biggest risk lies in not investing at all. Emotional volatility can also be a challenge when it comes to investing in the long term. Even if eventually venturing into stock market investing, making decisions based on your emotions will make you lose money faster. When emotions are running high, it becomes difficult to make well-informed decisions and fully capitalize on the opportunities presented by the stock market. In order to achieve success in stock market investing, it is crucial to master your emotions. Individuals who are easily swayed by their emotions, reacting impulsively to every piece of information they encounter, are unlikely to derive benefits from the stock market. 6. Loyalty to cryptocurrency. Another factor that deters some individuals from investing in stocks is their loyalty to cryptocurrency. They believe that they can earn higher returns from investing in cryptocurrencies compared to traditional stocks. They perceive cryptocurrencies as a superior investment opportunity due to the potential for substantial gains in a relatively short period, unlike stocks, which may be viewed as slower and less lucrative. Cryptocurrencies have gained significant attention and popularity in recent years, with some investors experiencing remarkable profits during periods of cryptocurrency market surges. The allure of quick and substantial returns has captivated many, leading them to prioritize crypto investments over stocks. You should know that the cryptocurrency market is highly volatile, characterized by rapid price fluctuations and inherent risk. The potential for substantial gains is accompanied by an equally significant potential for losses. The lack of regulation and unpredictability of the crypto market makes it a speculative and high-risk investment avenue. On the other hand, stocks have a longer history, with established companies providing tangible assets, earnings, and dividends. Investing in stocks offers an opportunity to participate in the growth and success of well-established businesses over the long term. While stock market returns may not match the rapid gains seen in some cryptocurrency investments, they can still generate consistent and sustainable returns when approached with a well-informed and disciplined strategy. 7. Desire for quick wealth. A significant barrier to investing in stocks for many millennials is the strong desire to achieve rapid wealth. This desire for quick riches often makes them fall victim to scams and fraudulent schemes as they want shortcuts and instant success. The allure of easy money and fast returns is a pervasive mindset that hinders most people from considering stock market investments. Of course, achieving substantial wealth through stocks is a long-term process that requires patience, perseverance, and a disciplined approach. Building wealth through stocks entails investing in solid companies, staying committed to a well-thought-out investment strategy, and weathering market fluctuations over time. Unfortunately, the culture of instant gratification prevalent in today's society has eroded the virtues of patience and delayed gratification. Many individuals, particularly younger generations, are more inclined to seek quick wins rather than invest in long-term opportunities. This mindset can prevent them from reaping the benefits of stock market investments, as they may not fully grasp the potential rewards of staying invested over the long haul. To overcome this hurdle, shift your focus from immediate gains to the long-term perspective. Educate yourself about the power of compounding returns. Study successful investors' journeys and understand the historical performance of the stock market. It will help you to cultivate a patient and realistic mindset. By embracing a long-term investment approach and recognizing that wealth accumulation is a gradual process, you can develop the necessary discipline and perseverance to navigate the stock market successfully. It is vital to resist the temptation of quick fixes and instead focus on building a solid foundation for future financial growth. These and many other reasons might be why you haven't yet invested in stocks, but it's time to stop making excuses and take your financial life seriously. There is no need to delay any further. The stock market can be likened to a gold mine, where you must dedicate time and effort to prepare the ground before reaping the rewards of your hard work. Building wealth through stocks may be a long-term process, but when approached correctly, it promises substantial returns. The time to start investing in stocks is now. It is crucial to understand how the stock market operates and seek guidance from a mentor who can provide direct support and knowledge. Taking these steps will position you for success in the stock market. Remember, the stock market will continue to create millionaires, and if you continue to make excuses, you may miss out on the opportunity to benefit from its potential. Excuses will only keep you where you are, but taking action will propel you towards where you need to be.